lot of interactions with the client side, and we have a team behind us that does more of the marketing. So I'm excited to be here to offer my perspective from what we see in the market. So
thanks, Mary. Alexandra, if you'd go next.
Sure. Hi, everyone. Thank you so much for joining. I am an underwriter of AI performance risks at Munich Re. So what our team does is works with startups and corporates to essentially guarantee the performance of their AI solution. So we're industry agnostic. The idea is that you can de-risk your customers' operations if you're an AI provider, and we enable the adoption then of good AI solutions in the market. So before that, I was working in kind of the traditional insurance side, and I have a background in law, so I'm a lawyer originally. So very interested in topics of AI and liability, but really excited to now be more in the cyberspace.
Wonderful, thank you. Peter?
Thanks, David. Hi, everyone. I'm Peter Pilat. I'm working with Howden since April this year. Actually, I'm children of a child of insurance working for Allianz since 2008 and different positions, building up the German cyber market. And before I joined Howden, I worked for Parametrics. I've been a managing director for Parametrics in Europe. A really interesting insurtech you maybe heard about, dealing with cloud downtime, IT downtime, accumulation risk. So having a deeper look into the supply chain, so we will talk about this one. And Howden is the biggest non-US headquartered broker in the world. So my part will be to give you a bit the perspective outside of the US, what we are seeing in Europe and the rest of the world.
Wonderful, thanks. Tom?
Hi, good morning, everybody, or good afternoon, good evening, depending on where you are. Delighted to be part of this panel. My name is Tom Ricketts. I'm the cyber practice leader for the Aon Professional Services practice. So my client constituency is the consulting firms and law firms who are providing services and advice to industry in general. My background is over 30 years, specializing mainly in technology insurance. I've acted as an advisor to the World Bank, to the EBRD on investments and risk in communications technology, everything from I was involved in Iridium when that was a startup. I was involved in Flag when that was a startup. So I've covered a lot of ground in technology.
Thanks. And last but not least, Andrew.
Thank you, David, and thank you to Hub Security for putting on this event, to my esteemed panelists for joining us today, and all of the viewers and attendees today. So good day to everybody. I'm Andrew Carell. I'm a Director of Insurance Solutions at Security Scorecard, the market's leading cyber security risk ratings company. I work specifically in our insurance solutions vertical, really helping to enable brokers and insurance carriers the world over to better enrich their data and their operations around continuous underwriting and proactive broking. My background is actually with insurance carriers for the past decade. Been underwriting small and mid-sized technology startups as well as life sciences companies, mainly focusing on cyber insurance. So I've like many of my panelists here, have seen the quick evolution of cyber insurance over the years, and very excited to be here to discuss how that applies and how the digital supply chain and associated risks are being viewed today, and what we can do to better those. So thank you again.
Great. And just to clarify, when we say supply chain, we're really speaking to all third-party risks, cyber risks. So Tom, just to make sure that everybody's clear, of how that fits in, obviously, to your practice, and we look forward to your perspective. And the other thing that it's important to point out is we're not just talking about named perils, on a single policy. This is really about all of the different mechanisms that companies can use to protect themselves risk management tools, contractual obligations on the part of suppliers, and then obviously how suppliers can access the markets where today there may be a limitation by implementing certain types of technologies or practices to be more effective and more competitive. So I just wanted to point that out as we kick off. I'm going to really focus the moderation in broad categories. I'd like to talk about the whole risk management insurance life cycle, starting with the state of the market, and then we can talk about specific approaches, of which, Andrew, obviously you've got a unique approach with regards to the data and analytics component. But why don't I throw this out there, and Mary, if you'd kick off, and let's talk about the state of the cyber market broadly. We're coming out of a hard market, and what that means to you and what you're seeing in the market, both challenges and opportunities. And you're on mute, Mary.
There we go. Sorry about that. So thank you for that question. And it's exciting to see the market working again. So I feel like 2 years ago, I actually have been doing insurance a long time. And I thought, for gosh sakes, I don't think the cyber insurance marketplace is actually working, because there was no opportunity to secure, in many cases, for some accounts, in a lot of accounts, we hit the perfect storm of a ton of ransomware claims hitting. And this is about 2021-ish timeframe. And at the same time, underwriters were a little caught off guard. They really didn't have a good handle on the exposures, the controls. They didn't, unlike an auto policy where they understand that exposure really well, there's a lot of data behind it. They were caught off guard as to how to price it, how to make money, and how to predict the claims. So what happened was the market kind of froze out, as a lot of people on this call and on listening understand, because you may have experienced it directly, where you didn't get a lot of options, or maybe only one option, or they cut limits, or et cetera. Reduced coverage, cut limits, increased the premiums. And then what happened as brokers, we were sitting there trying to find other markets, and everyone was closed for business. No one wanted to write anything new. So in some cases, clients had to reduce limits, and so if they had a tower of limits, and in some cases, clients had to go without. And then we kind of went through another evolution of cutting ransomware or getting co-insurance involved. So what we're seeing now is the market's working. So what happened was, I think the underwriters, and thanks to Andrew's work and the cyber controls, the marketplace in the insurance side is working much better. We have new entrants that have come in. Underwriters seem to have a handle on the information that they need in order to underwrite and assess the risks. And we're now seeing opportunities for more than one quote and competition. And we're actually seeing a pretty significant, in higher layers, we're seeing a lot of competition in some cases. And so I would say it's mature. We went through a little bit of a crisis, and now we're stabilizing. And that's good for our economies. That's good for business, but we're not done, right? This is a exposure that never stops. It's very present all the time. And like a fire that might happen every so often, the world of cyber is happening all the time. So I'll stop there, but that's my take. It's nice that it's actually working.
If I could just add a bit of perspective to that, I think my concern is that I think there's a possibility this could be a bit of a false dawn, because I think following the massive rate increases that we saw over the last couple of years, we saw clients experiencing 100-200% rate increases. And at the same time, we did see a reduction in ransomware activity towards the end of last year. And I think this gave insurers a false sense of confidence, or possibly false sense of confidence, that the controls were working, that we were achieving rate sufficiency. And so this has led to, as Mary was saying, this situation where there's more capacity coming in, there's more willing capacity, rates are actually going soft with the competition, they seem to have peaked out. I think the disturbing aspect is that ransomware came back with a vengeance towards the last quarter of last year, and particularly with groups like Klopp, their activity levels increased massively in that quarter and are not stopping. And we're now getting into an era where we're looking at these systemic types of risk, that really started with back in 2017 with NotPetya, that educated the threat actors on the power of systemic risk and therefore supply chain risk. So we're seeing it right now with MoveIt, which is affecting companies worldwide. We've seen it with the attacks on the pipeline that happened a year or two ago that disrupted everything and everybody up and down the East Coast of the US for a period of months. And so this environment indicates to me that, the current relaxed state of the insurance market may not sustain. So, it'll be interesting to see what happens. I think the mid-year reinsurance renewals are pretty much done, but I think the end of year reinsurance renewals are going to govern where the market goes into the new year 2024. And we could be looking at another, I wouldn't say peak, but another reassessment of the market about what capacity they deploy and at what price.
Thanks. Peter, I know this is near and dear to your heart. What are your thoughts?
Yes. No, that's really interesting, because normally Europe is lagging behind 2 or 3 years, but cyber is different. So here we definitely see the same development. We had rate increases during the last 2-3 years, and now, especially in the higher layers, it's dropping. At the same time, we also see the ransomware, we see the claims in the supply chain. And so it's a bit different, but it's also because we have new capacities. So there are a lot of US-based players, NGAs coming to Europe, UK, new insurers like Mosaic and Co. And they're all bringing capacity to the European market. So it's still interesting to see how the reinsurance market will act. And this will be interesting for Munich Re and Alexandra, because it's still like not all of the reinsurers are bringing in the capacities, and we haven't found a way to bring it to the capital market yet. Yeah, there have been some ILS deals and retrocessions, but not like in the CatNet or in other areas. So I'm wondering if the capacity still will grow as it does at the moment, but I'm sure we will see a very difficult and really different renewals. So some insurers will still increase their rates, and others are coming in, so that it's now a really tough broker market to negotiate through it. And that's, from my perspective, it's really fun, because we can now deliver for our clients. But for the client, it's really difficult, because they will see some offerings like with changes of 50% up, and others will offer like 30% below the existing premium. And the premium difference of 100%, 150% need to be explained towards the client. And that's the point at the moment.
I think the other extreme difficulty that our clients are facing is actually understanding what they are buying, because cyber is still a very new product. It's still evolving. It hasn't gone through that convergent evolution that all other insurance policies have, where you can easily compare one with another. I